Today is September the 12th. I talk a lot about the negative volume index, and I've been tweeting the last few days about the NVI for Amazon. Let me explain how the NVI works to you. Let's just take a look at Apple here, and we look at the negative volume index. For any period of time that you set your chart to, your negative volume index is always going to start at 100. So everything is relative to the earliest date that you've set on the chart. The negative volume index is only calculated on days when the volume is lower than the preceding day, such as this day here and this day here. This day had a higher volume, so it doesn't qualify. This day had a lower volume. So what you do is on that day, you take the change in price of the stock and multiply it by the previous day's negative volume index. So if the price goes down on a lower volume day, then the index is going to go down. Fosbeck, F-O-S-B-A-C-K, said in his 1976 book, Stock Market Logic, that this is a sort of smart money indicator because the so-called smart money likes to accumulate stock on days when nobody is looking, when the volume is lower than it would normally be. Smart money isn't in there buying stock when the volume is running up and the price is running up. They're looking to pick their spots, and they do it on quiet days according to Fosbeck. So now let's take a look at some negative volume index and their charts. Apple, very, very strong, hardly any plateauing. Strong stock, strong negative volume index. AGNC is a REIT, strong stock, strong negative volume index, currently running at 127.1. Amazon, strangely enough, strong stock, not a strong negative volume index. Recently, these red dash lines indicate days of lower volume than the previous day. And we saw Amazon starting to take a turn up. But now 3 of the last 4 days have been down. The only exception was this day right in here. Even this this price went up, but the negative volume, lost my train of thought. In any case, we're seeing a trend down. Let's go through a few more stocks. BTU, currently running about flat, running right now about 100% or 100 negative volume index. It's been higher, it's been a little bit lower, it's starting to come up. The stock is starting to come up. On these lower volume days, the negative volume index is moving up. People are accumulating this stock. Smart money is accumulating the stock, if you believe the theory. On Caterpillar, even though we saw a very weak period in here, we didn't see people giving up on lower volume days. We saw the stock price coming down. Let me just highlight that for you. It's pretty obvious. We saw the stock price coming down, but we saw the negative volume index throughout this period moving up. People were not giving up on that stock. Now we see a little bit of a turn down while the price of the stock is moving up. This could be people who were buying in this period right here, who are now cashing in a little bit, but the index is still a strong 36% above the beginning of the year. So people didn't give up, smart money didn't give up on the Caterpillar stock. Cummins, same thing as Caterpillar as you'd expect, same type of general business. When the stock was going down, smart money on lower volume days was not giving up. Reached a point right about in here where smart money did start bailing a little bit, and now the trend has been flat. We're seeing Cummins starting to move up again, and the negative volume index is trending upwards again. I'm only going to show you about 6 more stocks. Here's Corrections Corporation. Really took a drop. So while the stock was going up, the negative volume index was, well, it was coming down here. While the stock was flat, smart money started to bail on it and then continued even though the stock was moving up. It went into a flat period. All the time the stock is moving up, continued on a relatively flat, maybe you could say this is a little bit up, and then the stock starts to move up. Smart money starts buying on low volume days, and we saw this change in direction here. If we had gotten involved with this stock when the smart money index started to move up, it would have been right in here, and we'd have enjoyed a nice $8 profit. FCX, we know the problems that copper has been having, and the negative volume index started turning last October, and it didn't move until July. And then in July, when the stock started to move up, we started to see price accumulation on lower volume days. This is a positive trend for FCX, Dr. Copper. Gold. Gold, we saw the negative volume index moving up, going into a flat period, and we still have it in a flat period, but we do have a little bit of positive change of direction, and we also see gold reversing. Remember, the negative volume index only moves on days when volume is lower than the previous day. Google. Scale started at 100% naturally. It's now coming back down to its medium 100%. It hasn't really spent much time above 100%. So on lower volume days, this is a highly manipulated, high frequency traded stock. So it's not so much a stock that I think would be a smart money indicator, because the volume, there's a lot of volume on day trading. But on lower volume days now, the stock price is going down. I'd just be a little careful buying Google as its index is returning back to flat. If you're a long-term swing investor, there's nothing wrong with ignoring the negative volume index if you're a day trader. Home Depot really starting to pick up steam after most of the year around 105%, 104%. Started to pick up steam right here, and the stock started to move up, and we had accumulation going on the lower volume days. IBM, I'm going to skip IBM. I'm just going to show you one more, and that's Lulu. And here we had Lulu at 100% here, struggled on either side of the 100%. Smart money was dumping the stock. The price was going down. Smart money started accumulating the stock. Went into a period of smart money indifference, where on lower volume days the price wasn't changing. The price was moving on the higher volume days, was not moving tremendously or not much at all on the lower volume days. And then right about here, on June the 14th, we started to see a change in sentiment in the negative volume index. That corresponds with the price having come down after this earnings drop. Notice how the negative volume index started to increase on low volume days right after an earnings miss. This indicated that smart money thought that the stock was going to come back, and they were accumulating on these low volume days. They really started to pick up accumulation here, and you know what the rest of the story is. The smart money was right on, and they were rewarded by this major rise in price, which was picked up right here by the smart money indicator reversing direction. If you want more information, the book is Stock Market Logic by Fosbeck. I think you're going to have to find it on Amazon in the used book section. I think the last print was in the 1990s, but it's an excellent book, and he dedicates about 10 pages to the negative volume index.